What's going on, everybody? Good morning. This is Jordan with Conquer, trading and investing, getting ready here for this live session with you all. Woo, I'm excited for it. How important it was. What about the Saturday uploaded video? How important that was for me. I needed that clarity. That was a good one. We're going to build off that today, right now. It's going to be a pretty powerful session. We're going to be going at it pretty hard, because we have a live session at 10:15, about an hour and 15 minutes from now. So we're going to give this one a lot of energy, and we're going to go through the markets right now and make sure everyone feels pretty comfortable, because right now we're seeing some nice volatility, right? By the way, I see a lot of people emotional. I see a lot of people emotional about some moves that are happening on DXY, on Tesla. You know, it's never good to be emotional. It's never good to be emotional. It doesn't matter if a trade's going against you or for you, because if you're emotional when a trade's going even in your direction, that means when it's going against you, you're going to be just as or even more emotional. Those are bad signs. All right, if you find yourself very emotional, that you have to consider that. All right. The sky is falling. All right, so I wanted to, because this is like Tuesday, but it's like Monday for us all, in the fact that, well, yesterday was Labor Day. We didn't have a live session together. Oh, I said Saturday's video. That was yesterday's video. Let's start right over there. We were looking yesterday's published video. We were looking right here at the resistance we were coming into. Now, I don't know which way it was going to go off of that resistance on the Nasdaq also. That's the last thing we said. We're just into some resistance. I didn't know if it would be rejected by that resistance or pop up. All is, I did know that it was not the right time to be looking for a position. Still looking to lean in long when it's the right time, right? Still, yeah, there's so much going on right now, right? I think it was Greg brought it up this morning. We have, what a winter. We have the U.S. elections. We have COVID. Whatever else we have going on, who knows? U.S.-China tensions rising. That's going to be 2021 thing, right? But there's so much going on. Nevertheless, This was a meltdown. Let's just give some quick perspective as we run through everything, because we need to look what's going on in the dollar. We need to make sure that we all are well situated. We need to see what's going on with gold and silver and Bitcoin, all of it. We're going to start here though. Mike, good morning. I appreciated your comment yesterday on the YouTube video. Just a simple good morning. How you doing, Jordan? Thanks for that. Do appreciate that very much. So over here is when I got neutral on equities, right? That was at the beginning of August. Generally, August tends to be late August, tends to be a time when we see a retrace on the markets. We saw a melt up instead. I said, wow, I left 8% off the table, but I just didn't want to be involved. It was too risky. Here we are, back to where we are right now, right? It's still not the time to enter, but now at least the risk reward is in our favor again. What do I mean by that? Well, you could see this channel, right? This channel, that's the upper, that's the lower, right? You could see now we're back towards the lower middle of it. So now the risk to reward is back in our favor again, okay? It's not the time to enter yet. Like I said in yesterday's uploaded video, it's not the time to enter. And it's still not, and it might be this week. So we're going to continue tracking it. This actual down move, there's this rejection right over here, is actually quite bullish. It's actually quite bullish. By the way, remember this pattern over here looks very similar. You saw this big down move. Then you saw a lower low into the support. And that, again, was not the time to enter. I mean, we did do a video. We did lean in over here. But this is when it's safe. All right? It's just not time to enter yet. We're going to track this. We're going to wait. We're going to try to get ourselves into some good positions. Right now, equities are becoming attractive again. But Jordan, PE ratios are through the roof. Yeah, they're going to go higher. They're going to go higher. We're in a low interest rate environment. Interest rates are no longer at 4 or 5%. They're at 0. Things have changed. All right. They're going to go, PEs are going to go much higher. All right. But this is not, today's not the day to lean in. Today's the day to be neutral. Today's the day to be on the sidelines. We're going to continue watching after New York gets to work, because New York's stepping in today. Let's see what they do with the markets. If this holds over here, if this holds and we start going, do not get FOMO. Do not FOMO in. Do not FOMO in. All right. Remember, you're a lion. You're a lion waiting for your prey. Let's go with Nasdaq also. I added some levels for you over here. They're not dark only because they're not into play yet. I don't want my chart too messy, and I have way too many lines. All right, so you see how these lines are lighter? They're just as relevant. They're just not in play right now. All right, so what are we looking at? You could see also on the Nasdaq, we're coming into a nice area of support over here. The level is 11,077. You could see that coincides with trendline support. We're into some supply over here. This is nice. I'll be happy if we bottom out over here, but I'm not looking to take a long here today. All right. This is a session where we're on by the way, on the calendar this week, we have the ECB as we start talking about the Euro US dollar and we start talking about the DXY. Don't forget, in just 2 days, a lot of people are very emotional about the dollar today. We gave the clear game plan for the dollar yesterday, right? And that you got to stick to it. There's nothing going on here. By the way, if you're here this morning, please go ahead, support the channel. Go ahead and smash that like button. Do appreciate spending this time with you. And S&P, by the way, you can see we're also into this little bit of supply over here. We got this trend line support right over here and this horizontal trend line support coming in at 33.39, 33.40. The trend line is coming in at 33.60. We're into an area of support over here. It would be great for us not only to bottom over here, but put in a pretty big candle, and then we'll be looking for a retrace that's more controlled, less volatile, and then boom, that's when we're going to be looking to stock. So just hang tight. Just give it time. If you think you're in a rush to make money, you're going to be in a rush to lose your money. All right, so same thing at Nasdaq. Great. Probably tech leads on the way up. Still not time for us to take a bite at it. We're going to wait. We're going to wait. We're going to wait. DXY, let's get into it, right? So the last thing we looked at the DXY, and by the way, we had some nice, I'm trying to find out where it is up here on the tab over here. I don't see it right now, so I'm going to keep, there it is, right? We got a tweet this morning from Leon, and he was sharing. He's like, well, Jordan, check out, and I like it. I like mine. I'm going to show you mine and work off mine. But I like this as well. Here's the DXY. And he's like, look at the trend lines that I have over here, right? And I think that we're just coming up into this resistance over here. Good. I like it, Leon, a lot. And I also like the slope of this, all right? That's good. That gives people perhaps some perspective. It wasn't only Leon. We saw Stefan also do the same thing. And then, okay, back to mine, though. This is the trend line that I'm looking at. Watch that trend line. As long as we stay below that, that was uber bearish on the dollar. Here's where we peaked above. We came into our channel because we're watching that channel. Remember, I had it like this. You got to stay with me. This is so important because you have to learn what we're doing, how we're doing it, so that everyone is not so emotional. We were watching this channel over here, right? This channel. We broke above this channel into the resistance we were looking at. And then this is when we pulled back. This is when I made this lighter again because we pulled back into what was resistance. This was resistance. And then we pulled back and flipped it into support. Well, this is all getting me very aware that we could be seeing a breakout of the dollar. Don't forget, you have the ECB. How heavily weighted is the DXY in the euro? Heavy, right? You have a central bank meeting, press conference coming up in 2 days. You think the dollar is going to break out over here and get away before the meeting? It could happen. It's very rare that would happen. Don't get so emotional. All right. So we're just going to watch what's happening. Once we saw that flipped resistance turn to support right over here, and then we broke out of the channel again. I said in yesterday's video, if we break the 93.30, it's 93.50 that we're probably push up to, right? Because I went ahead. You see where my mouse is right now? I use that, and I use this peak over here as the area that we were looking at for resistance. We came into it, and now we're coming back down. If you get a resumption off of here now, if this then, today, tomorrow, resumes off of this, then we're expecting the counter trend move on the DXY, with the whole caveat, you have to watch what happens with the ECB on Thursday. So that's trading. It's never easy. Watch what happens today. Watch what happens in the next 24 hours to see if we get a resumption off, which would mean now here's the pullback that we were looking for. And the resumption doesn't need to be off of this pretty 93.30 level. The resumption could again come off of that trend line, but this time the outer line. Do you see how this time we flipped over here? We flipped over here, this resistance into support. So now we have this, which was this channel resistance. We have this. If that's flipped into support, it could be either this or this. That's what you're watching for. What negates this? If we get a false breakout and fall back in below that line over here, that trend line. That's the dollar. That's as clear as can be. That's your game plan. You don't need to be emotional. You just need to follow it. Someone take... Yeah, so by the way, I'm not focusing on comments at all today because it has to be a quick... Sorry, Jason, I mean that. It has to be a quick session. We have a lot to pack in the next hour. So I'm going to keep flying. And then tomorrow we have a lot of time together. It'll probably be a long session, like a 2-hour session. But today we have a training session. So, listen, people feel like you need to trade and trade more and off shorter time frames to make money. It's actually the opposite. The higher your time preference, the more probable that you're actually to be successful. Trading off the 8-hour, taking a few trades a week is going to make all the difference. If you're not profitable, take the course and work with me. It's simple. All right. The dollar's not really going up so high. The dollar was way down. The dollar's off what, 10% on the year? The dollar is like People are like, why is the dollar going up so high? But I'm looking at the dollar falling, right? By the way, probably maybe today, maybe tomorrow, maybe the next day, I really want to step in to that whole inflation deflation debate, right? Because there's just a lot of misinformation out there. At the end of the day, by the way, I don't care, meaning I'm following price. And if we break out to the upside over here, I'm going long. If you're going to take that whole like big macro thing and like, oh, well, it doesn't matter if I'm wrong for the next 6 months or 2 years or 6 years, that's not a way. No, we're following what's on the charts. We're staying on side of the trade. Nevertheless, I love it and I love the markets. I'm going to give you my thoughts on what is going on. Bring a lot of clarity. There's a lot of people painting narratives over there. They have a lot of people on the wrong side of trades. And you know what? I just feel for anyone who's spending time here, I want you to know what I'm thinking, so you have that clarity, just to kind of refute that what I believe to be misinformation. Let's take a look over here at the bleeding gold. You could see it's broken down outside of this trend line. So I'm going to draw in this trend line for you to give you some type of awareness, right? You can see that trend line has now broken bearish, right? We lost 1930 bearish. However, it's still not easy because now it looks like a triangle is being painted, right? A descending triangle, I should say. You see the descending triangle? Yeah, and probably this breaks down then. I don't know what the percentage is. Anyone know what the percentage of a descending triangle breaking upwards is? Nevertheless, there's where you are right now, right? So this is our new line over here. This line over here at 1900, almost the whole number, a breakdown, right? If we get a breakdown, probably you come down to here before coming back up to retest it and a resumption down. That will set up a big move on the against gold. That could definitely be in play. That could be in play this week. It could be in play next week. That's something for us all to watch out for. That could really set us down, bringing us down over here to the big support in the 1800 level or even further to 1745. Have the capital ready, have the mindset and awareness ready if that does happen. That's where you're looking to lean in. It's too soon to call it, though. It's too soon to call it. So that's gold. Let's look at silver. I don't know. Someone could Google it and let us know really quick. I don't know. Silver also, again, silver looks a little bit more bullish, but it's maintaining the line that we've put in it, and as long as it's above it, is very bullish. Just call it 26 to be easy on yourself. The whole number. That's the number to watch over there. So everything is at like very critical support and resistance levels. And that's when you start seeing people get really emotional that like they believe that like it's going to break, because right now they've been on the wrong side. Now it's going in their favor. And this is when I look to lean in towards the trends. This is when I look to lean in towards the trends, right? So let's see what else is going. Michael, in an uptrend, the descending triangle has a higher probability but continuation pattern. Stocks Yelp, first and only warning. Yes, you got to hold on to the trends. That's right. You got to hold on to the trends. That's right. And by the way, just so everyone's clear who's here right now, if we break down over here, I'm uber bullish on gold. We're in a bull market on gold. I'm only expecting a pullback, maybe to 1800 or 1740. That I'm still uber bullish on precious metals. That will be for a foreseeable time. And that's until growth returns. We're going to see some powerful moves on gold and silver, both of them. Forget about Bitcoin. We'll talk about Bitcoin in a second. Talk about Bitcoin right now. Bitcoin is still unable to break the resistance up here at 10,572, but we are still consolidating. Gave a beautiful look at Bitcoin in yesterday's upload, talking about the CME gap, the target on the head and shoulders that you all were correctly watching, and I was not. And that the target's coming in at 97.50. We haven't yet reached it yet for the head and shoulders. If we do, then there's a strong possibility we'll be able to take and close that CME gap. If that all happens, that's all enormously bullish, because as we broke out of the bull market over here, why I was looking for us after coming up and consolidating to make another leg up, you all know I'm always aware that we could have at least a 30%, right, pullback, which will take us right around, this is about a 25% pullback, by the way, into this area. Is it possible that we test the breakout of the bull market, come into this trend line over here? That would be, that's so bullish technically. So I hope, I don't say I hope it happens. I expect at this point, this could go either way. This consolidation over here could go either way. By the way, the month that people asked, what about September? This is really important to share with you for those that missed it. I don't have a referral for Pax Gold. Pax Gold. Pax Gold, by the way, is now being used by BlockFi, and I am a big fan and proponent of BlockFi. For over 2 months now, all of my Bitcoin purchases have come off of BlockFi. There is a link in the description below, an affiliate link, if you're interested in getting Pax Gold through BlockFi. Thanks for even asking. I do appreciate that kindness. September, this is going back 10 years of data, 9 years of data. 2010 through 2019, this is the Bitcoin average monthly return. And you can see September is notoriously a down month, the only down month for Bitcoin also. By the way, when I'm talking about by the end of 2020, us looking at right around $17,000, $18,000 on Bitcoin. And if anyone thinks that is like, wow, that's a little crazy, right? Well, look at this. In October and November, look at the average gains. So do you think that's that crazy? That puts us right where I'm targeting, right? So is this month going to be a down month? I have no idea. If you look at the stock to flow, we're in the 5th month since the halving, and in the prior 2 cycles, the 5th month has each been up. Here's the 5th month, it was up. Here's the 5th month, it was up. Now the 6th month on the prior 2 were both down, right? So this would be the first time a 5th month is down. But if you look at, historically and seasonally, it's a coin toss. I have no idea what's going to happen, right? It's a coin toss. I have no idea what is going to happen, whether September is an up or down month on Bitcoin. Could go either way over here. So that's helpful for me. I hope it's helpful for you. Yeah, Tesla and Apple and both. So, by the way, first of all, and most important, as we're doing our analysis off of the indexes, when we say, all right, now's the time to lean in, and right now is not. I hope you saw what at the beginning of the live stream when we did look at the indexes. It's not yet time to lean in. When we look to lean into the indexes, that's when it's time to lean into individual stocks. There's no point in looking at Tesla and Apple and everything like that this morning. Tesla's bleeding this morning pre-market, right? Apple's down also because it's not the time to lean in, all right? So we have an important session to go through. When it's time to be looking at those, we will. All right? When it's time to be looking at those, we'll dig into them. But I do want to keep going over here. I do want to keep going because it's really important first to get through all of this before we can start looking at any individual names over here. I don't know what's going on over here. Maybe we have a lot of people. By the way, if you're new here, welcome. I'm glad you're here. And if you're new, welcome back. But if you do, here's the deal. If you appreciate the time being spent here with you, if it's offering you any clarity, I just look at the charts, try to give some unbiased analysis here to help you firm up your own analysis. You could agree with me or disagree, as long as after watching, you got a clearer view. That's what's important. All right, so let's keep going over here. Bitcoin, and we looked at actually also in yesterday's upload Ethereum and Chainlink, so everyone there has a little bit of guidance over there. This consolidation that we're experiencing on Bitcoin, by the way, is going to lead to one of two things. Obviously, either we break down for another leg down, and we expect that leg to end somewhere into this trend line over here, coming in right now today at 93.80, or the one below it, right, at 92. There's a lot of supply at 92, by the way. There's a lot of supply at 92 over there. That was my last entry before we made the bull market. So let's go look at FX for a moment. And we're looking here. I'm going to extend. This is the Euro US dollar, by the way. I'm extending this line over here. Did we break it? We're on it right now this morning. That was my parabolic trend line. No, that's my parabolic trend line. Sorry. That was. This one over here, though, as long as this support holds, Euro US dollar remains super bullish. You have the ECB in 2 days. That is a huge, huge high news impact event. You have to be aware of it. Why today though, until this breaks, I'm looking for this to hold. If this line breaks, then very clearly we're coming back down to test this blue trend line. That blue trend line that comes back and goes back to 2008, a 12-year trend line. It's a big one. If we lose that trend line, at that point, okay, we could come back down to this one pretty quickly. If we lose this blue trend line over here, we could see a big move on the DXY. A really big move upwards on the DXY. We'll be coming down to test over here. Now let me show you on the DXY what that looks like, just so everyone knows. That will mean we're coming back up to 95.81 on the DXY. I'm going to show you why I say that. I just want everyone to understand before things happen. As they do happen, everyone has that awareness and control. That is also a big, big trend line here on the DXY going back to 2011, right? If we just looked at the Euro US dollar, if we lose that trend line on the year, we're going to be seeing a bigger correction, probably up back onto this trend line over here. We also have some pretty strong horizontal support in that area at 95.81. That's where I'm looking at targeting in that area. And depending on when that happens and how quickly we get there. Because if that doesn't happen until November, then we're targeting a little higher. We're targeting towards this horizontal line up there at 96.40. All right. So we'll just keep doing it. We'll keep figuring it out. Right now, this is what we're looking at. Euro US dollar has a very excellent. Just looking at my nephew just texted me. I was asking him because I told him, hey, 2,200 was the place to exit on Tesla. Obviously, Tesla went up higher than that. It went up to what, 2,500 or $500 after the split, right? There was a lot of stuff going on there that was unexpected, right? So I just wanted to make sure that he at least got out at 2,200. There's nothing wrong with, you don't have to get your exits at like the highest peak, right? A lot of people, they miss their take profits by by this much. That's because you're too cute with your take profits. Better to get out, than look for that perfect exit. Same thing with the stop loss. All right. So this is a very important where we are today. Let's just focus where we are today into this trend line over here. You could see, follow my mouse, that's also some local support right over there. So if this could very well hold, and if that holds, yes, that's bullish, but yes, you're coming into, by the way, do you see that broadening? Do you see that broadening pattern happening over here? Do you see that broadening pattern happening over there? But it break below this trend line here today, then we're coming back down, and this is what we're going to see a bigger move. This is what we're targeting, and what that looks like on the DXY, that's probably us coming into this area right over here at 94. All right, Everyone got some good situational awareness today. What's going on, Mr. B? Good to see you. I don't have the time. You guys all know your all comments are always so important to me. I make an effort to read them all. In this session today, though, instead of focusing on comments, I need to really focus in on the markets to make sure everyone gets a good session here today, as we are limited on time. Yeah, we could get into some interesting things on a different day. So, by the way, CA, maybe I'm wrong. What my opinion is, if the Democrats win or if Biden wins, then you're looking at a weaker dollar. If Trump wins, you're looking at a weaker dollar, but stronger than if Biden wins. Yeah, we looked at gold pretty strongly, right? If you lose, see that triangle right there on gold? This should be up a little bit further. It's 1900, right? 1900. I don't like things so messy, but I was drawing it so you all get the picture. You could see this descending triangle forming over here, right? A break below there, probably you see a big fall to around 1880, and then look for it to resume up. If on the retest we resume down, then you want to exit any swing trades for sure and be targeting much lower towards the 1800 level. There is a new standard for PE ratios, and it's higher. Let's go over here. Let's take a look at what's going on with some all across FX this morning. Let's make sure that we have this really strong awareness of what's going on. Let's look at the US dollar, Japanese yen. This has been, by the way, just very sideways and very messy and unattractive. There are so many more important pairs to be focusing on than the US dollar, Japanese yen. So we're going to step aside. By the way, did you see the huge volatility on the pound, on the British pound? As now you saw Prime Minister Boris saying that look, if we don't have any progress by October, at that point we're looking for a hard exit. I think he's serious. This is why I have been saying over and over again into the end of the year, I am not interested in the pound whatsoever with what's going on with the Greek exit, because the closer we get, the more volatility we get. I look for where there's clarity. I look for high probability trades. That's where I make my living. People think or heard that traders need volatility to make money. That's absolutely not true. What you need is high probability. So we're going to skip over the pound pairs today because we just don't have the time to look at them. Australian dollar, Japanese yen. I went long here on Friday, and you could see we're actually back now into an area of the breakout. When I say breakout, you could see this was a triangle over here, right? You could see that triangle pattern. We broke out to the upside. It looked like we were resuming off, so I took a long over there, adding to my position from July, by the way. But we've since come back down and taking a look at that support again. This looks like it's in a very precarious situation over here. Let me come back. If it breaks down over here, if it breaks down further, and then we come back up and resume that, then we're looking at a bigger move down on Australian dollar, Japanese yen. This could mean we're looking at a bigger risk off move. A bigger risk off move if we break down below there. I think as long as we're holding above 74.66 over here, that support over here, the bullishness is still technically intact. Below there, watch out. That's going to take us down to this trend line over here, and then forget about it. That will mean the equity markets are really breaking down. We'll be watching that. Watching that. Thanks, Andreas. Taking a breath here, taking a sip of the green matcha to keep going. Let me come back up and see what's going on with the equity markets as they just open right now, right? By the way, if we take out the low of last week, right? That little, you remember all Friday's live stream? Everyone, if you were here and you watched it, hit the thumbs up. This is where we said it was time to take profits, anyone who is short the market. We said it was time to take profits, anyone who is short the market, but not enter long. We said both those things, right? We're back down to it right now. If we take out that low and then this support holds and resume up, be careful, not be careful. Expect that we could see a pretty strong move to the upside. That's not the move I'm taking. Okay, that's not the move I'm taking. Look over here. Do you see a big move up? That could be. We could see a big move up. Watch out for it. All right. I know everyone is so fearful right now. I'm not fearful. Every time we've come back into the trend line, that's where I've looked to get long here in the equity markets. I am grateful for this opportunity, but I'm going to wait and watch until it's the right time to enter. And today's not the day. Dollar is firming up over here. Let's say Nasdaq. Before we go any further, Nasdaq coming down into this area of support. It still has not taken out. By the way, equally as bullish. This is not just for the indices. This is for trading any instrument whatsoever. One of two things could happen as you come back and test the low over there. Either sometimes you miss it by a point or two, or take it out by a point or two. If you reverse on either of those situations, that gets a lot of traders caught on the wrong side of the trade. Let's see what's happening across the markets this morning. Let's look at Apple this morning. Big gap down. I can't stand individual stocks because you're so limited to the trading times. I don't like not being able to trade at all times. FX markets are way superior to the equity markets. First of all, the equity markets are like little peas compared to a gigantic watermelon when you're talking about volume. They're also open 24 hours a day, allowing you to enter and exit instead of having to be stuck waiting for market hours. Big gap down, Apple into some support. The gap down was into an area of support. This could resume up. Again, we're also looking at the equity markets all into an area of support. This is into horizontal and trendline support, right? Everyone's fearful. Tesla, right? Tesla too, gap down. Is it into support? Not yet. It's not into support. I don't have, because the whole stock split of Tesla messed up all of my trend lines. I don't have any of my trend lines anymore. I want to draw one right over here to give me some situational awareness. A lot of people are probably watching Tesla. There we go. Clone. Let's bring this down over here. So I'm trying to line this up. Right over there is my eyes focused on this point and on that touch. And then you see that was resistance. You see that was resistance. You see that became support. Do you see we're into that right now? Now, by the way, do you see where we peaked out over here? Let me clone that line again. I just got to make it clear because I want everyone to know what I'm doing and why I'm doing it. All right. Now look over here. By the way, do you see that touch of support? Do you see that resistance over there? Then again, right over here, that became the support. Do you see that peak of support in that area? Do you see where we are? Right? Everyone's fearful. Everyone's fearful into support. Interesting, right? All right. So, what else is going on here this morning that we want to take a clear look at? What happens if we break that? Right? Let me just move that. I'm not going to do it. What happens if you break that? These two don't line up so well, so I don't have a clear shot at that. Right over there. That's your next bit of support. That's also horizontal support. Does everyone see that? Right over there. Is that a good place to lean into? Both of these. If you resume off of this trend line today, right? What do I mean by resume off, right? If you start making a higher high than the previous price bar, too bad you have this big gap and you're stuck, right? What do I mean by stuck? Well, you got to wait till tomorrow. Sorry. Same thing over here. If you come back into this, look for this to hold and resume off. Tesla, by the way, and again, this is where I got my nephew out. He just told me he got out at 2,085. This is a good exit, right? We talked about it together. We told him to get at 2,200. Still got a good price. Am I going to be sending him some charts later and telling him he should be looked to lean in now if we resume off? Yeah. I think that the market was melting up, has now since melted down, and I think now it's reset to where it's starting to become attractive again, right? I'm not looking for an entry today, but now we could really be tracking the equity markets again. So what else are we looking at? Dollar is still strong here this morning. Still strong this morning. We got a really nice look at that this morning. Hold on over here. So, by the way, anyone here who's just joining us, I'm glad you're here. I think that you found a gem, right? This place is fantastic. The community is just uber knowledgeable and supportive. We have a great group of people in here. You will learn a lot. If you haven't yet subscribed, go ahead, subscribe to the channel. Spend not only a couple of sessions, commit yourself to a week. If you spend 1 week here in our live streams, you are going to know the value of this education, and you're going to want to make this a home. So I'm glad you're here, but things do not happen like this. You have to invest a little bit of your own time before things start making a lot of sense. This is actually a little bit of a faster paced session, only because of the time constraint today. Just give yourself that opportunity. Give yourself that opportunity. Thank you, Alex. I do appreciate that. Yeah, we haven't looked at oil in a long time. We'll look at oil really quick. Thank you for that. Let's take a look at oil right now. Oh, great. So, by the way, we've basically this whole sideways period have just kept everyone out of oil. It was Roman inside the Telegram group who pointed out that breakdown over there. Roman, great job. Because I gave up on it. I was just focused elsewhere. What's happening now is oil's coming off pretty hard, right? What does that mean? What is that? First of all, over here, right? I'm looking at this area over here where the market tried to put in some support area. Over there, you see that test also. There's a resistance. We're trading below that this morning. Let me go ahead and bring down a resistance support line right over here. I'm going to put it. You can see we're trading below that right now. That's interesting. That's a support line until we close below it, by the way. That's a support line this morning. If we close on the daily below that, that line then goes to red. Okay? And then at that point, we'll be targeting lower, 34.50. 34.50 is pretty big support. Why do I say it's big support? Look over here. Then look over here. That resistance flipped to support and then twice. That's a big level to watch over there. That's a level, if oil was able to resume off of, that I think it would be pretty smart to buy off of. I would watch this area over here to buy off of 34.50 if we're able to hold that as support. It's a big level of support. A lot of people sell into support. A lot of people sell into support and they buy into resistance. That's absolutely backwards. Once you get it in your head, two things. First of all, here's the most important thing. You only buy off of support in uptrends, and you only sell off of resistance in downtrends. Now, in a sideways market, in a range-bound market, you can sell resistance and buy support. I myself am looking for instruments to push multiple levels, so I look for trending markets. I only buy off support in uptrends, and I only sell off resistance in downtrends. Is this an up or a downtrend? Now, if you zoom out, this is a huge downtrend. A huge downtrend, right? And we were looking, and why I was not down over here, we were looking for the gap to close, and then that's a place, the 42, 44, 50 as an area to lean into to sell. Now, I didn't want any part of it. Because of the sideways price action. I avoid sideways price actions. But this is an uptrend ever since the March lows. Ever since this is April, when oil went to zero, when oil went negative, right? Now all the videos are on YouTube. They're saved there forever. I don't need to talk about how when oil was in its mid 50s, we were talking about oil coming off substantially to the mid 30s. And then when that happened a lot quicker, we were looking at 22. And then when that happened a lot quicker, 14.50, I never expected oil to go to zero. That was my last target. We got everyone neutral then. This is an uptrend. This is an uptrend ever since the bottom when the Fed intervened, right? This is a bottom. Buy off supports and bottom. This is a nice level to lean into if we hold this level and resume off it, 34.50. Now, Roman, anyone else who saw that channel, I wish I had your chart, Roman, to share with everyone because it was nicely done. Thank you for sharing with us all. And you took that breakdown because you were looking at the longer downturn trend. I get that. I see that. There's not much else to say. Let's see what happens today. Watch this level, $37 on oil, to see if you close above or below it by the end of the day. Whew, that was like a mouthful over there. It's been a long time since we've gone over oil, huh? Gold and silver bull markets. Gold and silver bull markets. If you're here and you're learning a thing or two or just enjoying or appreciating, yeah, go ahead and support the channel. Hit that like button. Do appreciate that. All right. DXY firming up at the highs of the day. Firming up on the highs of the day. Now, I never got my pullback yet. Let's see what happens during Asia, during London. We'll keep tracking it. Watch the area I put in at 93.50. Let me draw a line in over there. I'll make it very light. 93.50 is where I expected we come into, right? And that's where we pull back. Let's see. Let's see if it happens or not. Let me make it light, but dark enough we could see. All right. Let's take a look. Let's follow what's going on over here. Look, we took out that Friday's low, came down into the support. This is an area you're looking to watch and to hold and resume off of. If it does hold, I'm going to give you a couple of those right now. If we hold over here, I do think we could see a sharp move to the upside. I'm not buying that first move. Okay? If we lose this important horizontal support at 33.39, the green line over here, then it becomes gain time. We're coming back down into this trend line, watching this trend line over here. Over here, if we come into this trend line and hold it and resume off of it, then I'll be looking to buy. Not looking to buy this one. Would look to buy this one. That will probably be later today in the afternoon update. If we're trading down over here, we'll look at that together. In the afternoon, we'll publish an update. It'll be published by 5 o'clock Eastern time. Nasdaq also, let's take a look over there. Great to see you, my friend. Great to see you today. The dollar's up, by the way. The dollar is up a little bit, right? So, I mean, let me go ahead and call up my 4-year-old. I'm going to ask her, is the dollar up or dollar down? Is this chart going up or down, right? If we get the breakout here to the upside, it's a counter trend rally. It's a counter trend rally. We're looking for resistance to fade that. All right. So what else are we looking at over here? I didn't get a chance to go through FX today. I would like to get a better awareness. I'm going to go through some pairs right now to give myself to see if there's anything setting up that I want. So I'm going to start here with the Euro US dollar, right? This is what I'm watching big time today. Everyone has our plan for the Euro US dollar. It's pretty clear. By the way, you notice that broadening wedge over here. Australian dollar, US dollar. It's coming down into some area of support. This over here where my mouse is first local support. Why do I say that? This is the big level, right? 0.71823. That's some pretty good support level over there. Above it, you could see the market put in here was resistance, right? Over here, it was support. It's a light level here. It touched the support. We're into that level. A resumption off of here. Well, we in an uptrend or a downtrend? We're in an uptrend. What do I do off uptrends? I look to buy off support. Do I look to sell tops and buy bottoms? Never. That's gambling. You're going to lose a lot of money trying to pick tops. Don't ever do that. You're looking to make money out of the markets. You're not looking for any type of like rush. You're not looking for any type of excitement, right? You're looking to make money. All right. So let me keep going over here. This is the Australian dollar, Canadian dollar. You can see over here, what do? You buy off support, right? What happens now? I don't know. This is kind of sideways. This looks to be consolidating. Kind of no man's land for me right here. So what do I do? By the way, what I'm doing here when I go over FX, when I go through all these pairs over here, this is what I swing trade, right? This is what I'm using for swing trading. Silver, gold, those are bull markets. Right now, I'm accumulating, looking for bigger, extended moves. Bitcoin and all cryptocurrency, bull markets, that I'm looking for holding for the next 14 months or so, right? FX, this is where I'm looking to make my money on a day-to-day basis, swing trading. I go through all of the different pairs and I flag anyone that looks interesting, that looks like it's setting up, meets our setup criteria. I then have multiple flags, hopefully, meaning multiple possible setups and entries. I then look later in the evening during the Asian session, 8-hour time frame, 24 hours a day. There are 3 sessions a day, Asia, London, and New York session, right? I'm looking for any setups, any orders that I might place for the London session. I trade the London session, the one with the most volume. Right. And what does that mean? What does that mean? Oh, I don't like how my chart is all messed up. I'm not going to fix it right now. What does that mean? That means there's going to be more government stimulus. What is government stimulus inflationary or deflationary? There you go. That looks better. Do we say we are bearish now on silver if we retest? If we break down on silver over here, if we break down over here, you see that line in the sand over there? If we break down below it, right? Yeah, I think we're going lower. Now, be very careful. Breakdowns are very low probability trades. We don't ever trade the breakdown. We look for the retest, and then the resumption is the signal. That would signal that we're coming down first over here to 24.50. If that doesn't hold, lower. All those are quite possible. All of those will be definitely places to look to lean into. It's too soon to tell whether or not this is a breakdown or it holds. We need to see where we close in the daily. Breakdowns and breakouts are low probability trades. We don't take them. Murray, I loved your input in yesterday's YouTube video. Murray, I loved it, and it's really difficult to have any type of discussion like that, as well as it is if I'm doing all the talking and you're not. A discussion needs to be balanced on both sides. But Murray, I will this week. I went ahead and because of your comment, I want to talk all about what's going on over here. Not now, right? What's going on with MO, M1, M2, the chart that you suggested, which was over here, Murray. Taking a look at the lending going on in commercial lending, and I am going to break it down and add some insight into the whole inflationary, deflationary debate, and I'm going to do it well. So I want to thank you for that. I appreciated that. That tech is deflationary. Tech is deflationary. Technology is deflationary, right? Technology is deflationary. But when you say QE is deflationary, you have to define your terms, right? Because QE is uber inflationary for asset prices. Whether you're talking about equities, whether you're talking about real estate, it's uber inflationary for what other things? For food, for healthcare, for housing. I mean, for anything that households spend money on, it's uber inflationary. So be very careful. Technology is deflationary. Okay? But be careful. You have to define your terms. Yeah. So and you have to look at it as a whole. And the biggest, and I want to get into it now because I really want to present it well. But the biggest mistake people make over here, and by the way, right? QE leads to what? It leads to growth eventually, right? It firms up the bank's balance sheets. Then the banks begin to lend again. That leads to growth. That doesn't happen without QE. So therefore, QE is the prime mover. It's the first cause. So it's not that the fact that banks, but here's the thing that people are getting wrong right now. They think to increase the monetary supply, banks need to lend money. But do you not remember what just happened? Do you not remember that the government just sent direct stimulus checks to people, bypassing the banks completely? That's inflationary, right? You don't need this anymore. If you look at what's going on over here, I don't care if you look at M1, look over here, by the way, this is just cash in the system over here, right? And you could say, oh, well, it's decreasing. Okay, yeah, but since January, it's up 60%. So I don't look at that decreasing. I look at that as a huge increase. What about over here in M1? Well, that's increasing. What about M2? Well, that's increasing, but banks aren't lending right now. Oh, yeah? Well, the government is just handing out money right now to people. What about the PPP loans? Almost $1 trillion. You don't need banks to lend when the government is giving that money straight out. All right, but I'll present it well, just so everyone has that clarity, because there are a lot of people. There are a lot of people out there who are on the wrong side of trades. Have a lot of people on the wrong side of trades, and they're just like sticking to something that I don't know what the right side of a trade is. I follow the charts, and then I get on the right side of the trade by like coming to some type of conclusion. Peter Schiff yeah, he's right. Peter has been right on the long term about the price of gold. But Peter was wrong for 7 years and kept everyone through a 40% drawdown on gold instead of telling people as growth started, hey, it's time to exit the gold trade and then position yourself back into it. So, anyway, I guess I'm passionate about protecting people. Yeah, tech is definitely deflationary. Dollar's breaking out, right? We've been monitoring every move of the dollar over here. First, the breakout of this trend line over here. As long as we were below it, we were super bearish. Broke out above it, retested it, and now resuming off. Now breaking out above this channel over here, right? We're seeing signs that the dollar is getting ready to confirm a counter trend move. And if it is, it could be a big one, right? If we lose over here, the first thing we're looking for is what happens on that trend line. If that halts, that was the extent of the move. The dollar will never make it higher than 94. If we lose 94, at that point, this is going to be a big move on the dollar. It's still a counter trend move. I'm going to take a sip of some tea over here. So, and Murray, actually, I'm going to share this with you because, so first of all, I understand what thread you've looked at. To read this, you just want to be aware of both sides of the trade. This is like you have the perfect opportunity today, whether it's through different conversations taking place on podcasts, on YouTube, on Twitter, to really find people on both sides of an argument, both sides of a discussion, and then you get to go ahead and listen to both and then make your own opinions. Okay? So it's really good. This is what you need to watch. This is what you need to read, Murray. And it's a great thread over here. And it's a really important one. Okay? These things, and that answers your question directly about the velocity of money. These things take a little bit of time. It doesn't happen. It doesn't happen overnight. Actually, there's another one too. This one just answers this question. All right. We're getting close. We're getting really close. Watch these sessions over the next few days. I'm glad you're here. Welcome. Don't worry. Don't worry. People will realize really quick the gift, and if not, they'll move on. We only want to keep those who are interested in learning and add to the community. Turn up your volume. Now, I mean, Eduardo, so Eduardo, when it comes to basically all high new impact news events, what you need to do is not perceive what you think is going to happen. You need to watch what the said it during the press conference, what is said during the press conference, and how the market reacts to it. We're going to do all that together. There's nothing you need to know going into the meeting except the levels you're looking at on the euro US dollar. Here's the levels you're looking at going into the euro US dollar. Now, I expect this holds today. This is support. If it doesn't hold, then I'm looking for a prolonged move down into this area over here. This also, we'll see if it holds. If it doesn't, then we're looking at a big move against the euro. We're going to cut this session short today. We're going to go for about 5 more minutes, I think. I'm going to look through some more FX pairs, review what's going on in the market. And then, Antonio, because I have a training session here. Antonio, it is for both. I have traders with zero experience. It's simply the single best place that you could be to learn and very quickly. You do not have any bad habits to overcome if you're starting from zero. Now, on the other end, you have people who have been trading, who have a wealth of knowledge. People who have been in the market 17 years, 15 years with an enormous wealth of knowledge. They generally commit to the course because they want to be, they want to turn that corner for good to profitability. They have an enormous success doing that. It's for people of all abilities and knowledge. No question about that. So listen, just don't forget, it's about support and resistance. This is when a lot of people are so fearful and believe, we're coming into support. We talked about making that lower low coming off the support. So far it's holding. If we start making higher highs, it could be a big move, sharp and quick, right? I'm okay with that. I'm good with that. I'm good that we could come into this area, right? Let's call it 3,500 pretty quickly from where we are right now. That's a huge move. I'm okay with that. I'm going to be waiting, and then I'm going to take the easier move. But watch what happens over here. All right? People get really fearful as you come into support, and they wind up selling into the support. That's the worst thing you could ever do, is sell into the support or buy into the resistance. If your broker does not have the 8-hour time frame, it's a really good investment. It's like $7 a month. It will change your trading. Or you could use Oanda, who has 8-hour. If you use the Oanda app, let me write it for you. If you use the Oanda app, which is a phenomenal broker, they then have the 8-hour charts for you. You could trade off of there. Any last words on Bitcoin? Of course. It's just to this. Let's make a box. We're consolidating, right? We don't have no idea. It's a coin toss. That's my New York accent over there. It's a coin toss whether or not we're going to break to the upside or downside. If we break to the downside, at least we have a lot of clarity of where we're looking to target, and that is a great opportunity. If we break to the upside, we could see some fire because you have a lot of people trying to close the gap on the CME, and if they get caught on the wrong side of the trade, that could really send this back up quickly, getting us back into the channel over here. There's no other edge besides that. There's no edge to whether or not we break to the upside or downside over there. All right, everyone, we're going to call it a session. we're gonna call it a session. Tomorrow we'll have a much longer session. Tomorrow we're gonna go over everything with just at a slower pace, going across all of FX pairs. We're gonna make sure that everyone has a clear read. I'm glad you spent this time with me. Thank you for being here. Thank you for showing that love and hitting that thumbs up, helping support me and the channel. I hope you have a beautiful day. I'll be updating you all later in the afternoon. Let's go out with some nice music over here today. Hey, James, thanks for being here. Seriously, sincerely. Juan, thank you. I do appreciate that very much. I am grateful for all of you. It just helps me so much on my own analysis. Thank you, Mike. I appreciate that extra show of support there today. That was nice of you. Great to have you here with us. By the way, there's a different flow to every day. It depends what the market's doing. We follow the flow of the market. We don't impose our own will on the market. That's what's great. There's always opportunities to learn more. Maybe in stocks, which only trade 8 hours a day. Think about that, Doug. No, but stock markets is really a really poor market. It's a very small market. It's highly manipulated, and you're stuck to certain trading hours. It could, yeah, it could. We're going to be watching the levels where right now, the equity markets still technically remain very, very bullish. If we get any breakdowns, right, that could open up. So, hey, listen, November could be a lot of uncertainty. When that happened in 2000, the markets did not like that at all. We'll take it as it comes. We don't try to impose our will on the markets. We take it as it comes. Thank you very much. Thank you, Jason. Tony. This is on artist.io. It's called Honeymoon Instrumental. Honeymoon Instrumental. All right, everyone. Have a beautiful day, and I'll talk to you later.